Okay, hello and welcome, guys. I had some issues with my microphone. I hope you can hear me. I want to say hello and welcome to LocationPoint Academy part 11, and today we will talk about workflow, so the end of day workflow. So please just give me feedback if you can hear me. I am just not sure. I had some Windows updates running here yesterday in the evening and overnight, and today it seems I had some issues. Okay, I got also feedback here, and it seems to be fine. Okay, also a second feedback here. Yeah, great. Okay, then I think I got it running again. Microsoft, so Windows updates are always some sort of some thrilling times if you have some configurations to do. But okay, looks like I got it running, and so we can start with LocationPoint Academy. Yes, part 11 already of 15 parts, so we are already here going into going near the end already. And also today the workflow, the end of day workflow is, I think, we would be a fairly short lesson, because the end of day workflow is not that complex, and complex is nothing in LocationPoint. Is trading is complex, you know. You just have to know a few basic rules, and then that's it. And so LocationPoint end of day trading is not, you don't have that. In intraday trading you have this market preparation. In end of day trading you basically do not have market preparation, and therefore it's a quicker process, let's say, than quicker to explain also than intraday workflow. Okay, a few slides for the start. As every time, I think all of you heard this already. You can ask questions in German or English. The webinar is recorded and published to our LocationPoint protected group. Our social media profiles, yes, Twitter and Facebook, you can follow us there. And yes, the nice picture every week. Our agenda is already quite full of green ticks. Last week, break-even and trading, break-even stops and trading stops. We will do a short recap of this immediately after those slides. So as every week, you will get a quick recap of last week, and then a very short theoretical part. I think one slide I will draw for you today, just to write down. I have here 5 basic steps of the end of day workflow. And yes, then I will just show you in Agena, as every week, a little bit how this workflow is then done in the practical part. And that's it for today. The same is then in next week. We will do the intraday part, so there will be a lot of same stuff as today, but also some new. The market preparation is new, and also some of these things, how you sort your markets for intraday trading. But enough of this for now. You will hear of this next week. Today we will do end of day workflows. Who we are? Gilbert is the founder of LocationPoint Trading Style. I am a LocationPoint trader trained by Gilbert. As I see, basically, I think I do not see new names today compared to last week. Let's just go over, so I'm not you do not get bored by seeing the slides every week. Okay, the disclaimer is, of course, we have to do anyway each time. So yeah, you know, all I'm telling you here the next hour is no trading advice. You trade completely on your own risk, and of course each transaction on each stock transaction is associated with significant risk. Okay, we are already here in the recap of the last session. We did talk about break-even stops and trailing stops. So just remember, why are we doing break-even stops? We want to get out of the risk very quickly. We have this possibility with LocationPoint trading. Also, for diversified trading, it's quite good to be, let's say, quickly out of a position if it's not going into a direction, and because then you can just look for the next signal, and you will always have some LocationPoint trading signals anywhere, because you can trade it on each market. And yes, break-even stops, basically you trail to break even after 1 to 2 solid bars away from the entry. Yes, my nice drawings as every week. I need my laser pointer. Yes. What I drew for you here. Here we have our entry candle. I named this stairway signal here just for as example. And what we have here, we have one solid bar and the second solid bar. So basically you can trail already on the first solid bar in your direction. Okay, one solid bar away from the entry. Then you can trail your stop exactly at break even. And also remember I told you can go exactly at the entry price or a few ticks above, so that you earn your commissions also when the trade triggers your break-even stop. Also you can say, okay, if this candle is not big enough that you basically are not far away here, if maybe it is a solid bar, but you say, okay, let's wait for the second one also to be also even further away from the entry. You can wait for a second one and then go, at least there, go to break even. Basically this was everything about break-even stops. Then I talked with you about trailing stops. This was a recap also from the previous weeks, because in each signal week, so in each academy where we talked about a single signal, I told you also about trailing stops in so rough details. So here I just wrote you this list about which trailing stops to use for which signal. Basically also just for information, you can find all these informations also in the LocationPoint handbook, which you get when you buy the LocationPoint add-on, which you did all, because this is why you can be here. So also because I had one customer, I think this week also, who claimed that he did not get this LocationPoint handbook. I think this is 70 or 80 pages of all basically all this what I'm telling you here. There's this basis of the LocationPoint handbook, which basically Gilbert wrote. And just if anybody doesn't have this 70 or 80 pages of LocationPoint handbook, just write an email to our support team, so support at AgenaTrader.com. So just that if anybody doesn't have it, of course you all should have these documents. If they're, I don't know, if the guys from the web shop made some mistakes some time ago and somebody did not get it, just get in touch with us, and of course we will provide you this document. Okay, so here we have as first point the 8th train. For the 8th train we use a soft stop, the SMA 8, and for the hard stop the SMA 20. The hard stop is always the catastrophe stop, therefore you can also use a pivot fast. It's just that the catastrophe stop does not, that it's not kept at the initial stop level, but you also have some trailing here of the catastrophe stop, so that you also with your catastrophe stop are a little bit tight to the market, and you for the black swan events, you know, when you know this vocabulary, that this black swan events, which I don't know, just Switzer franc black swan event, for example. Anyway, in the black swan event like the Switzer franc, maybe also your catastrophe stop wouldn't be filled, but you know what I mean. Just to be also with your catastrophe stop, which should prevent losing more than you expect, to be with this stop as close to the market as possible and as far away as necessary. Okay. The most important thing is the soft stop here, also for the SMA 8 trailing, and most of the time the soft stop will get you out of the market. In LocationPoint trading also, at least for 8 train and 20 train, most of the time for me I get stopped out with the for 8 train soft, so for 8 and 20 trains with the soft stops. Yeah, at best of course I get stopped out, or I do not get stopped out. I just my targets get hit, but normally I do not scale out of the position completely, so I have some small part running always in the position until it's stopped out, but this is just on the sideline, some comment on the sideline. Anyway, for 20 train, what do we use? We use a soft stop, the SMA 20 as our trailing line, and the hard stop is here also a pivot fast. And here the first time we have the possibility for the 20 train to do a lane change. for the soft stop. So if we are in the trade and there is a reversal or retracement coming or developing at the SMA 8, and we see this action at the SMA 8, we can do a lane change and then trade at the SMA 8 to really be as close to the market as possible and do not give away any of our profits, or to give away as little as possible from our profits that we gained already. Okay, third group we have here are the reversal signals. The stops are the same there, so we have the stairway, the yo-yo 130 and the yo-yo 200. As soft stop we use pivot fast, and also as hard stop pivot fast. So this is just for the first stops, because you know we have to give the market some space for the reversal signals, because we are in this reversing and quite shaky phase. And the soft stop, there we have the possibility to do 2 lane changes. The first lane change possible is to trail to the SMA 20 if there is some action, and then also trail to the SMA 8 if possible. About these lane changes I do not want to talk too much here, because in the session 2 weeks before, I think, I talked in detail about lane changes. So this also you can listen and re-watch on our YouTube channel. So if anybody has some questions about lane changes, just watch this video about lane changes. Everything is on the AgenaTrader YouTube channel, and also all these links these direct links to the videos are in our LocationPoint protected group. Yeah, the fourth group is the wipeout, and yes, here we have as soft stop and hard stop, a power bar stop. Also this is just, wipeouts are, let's say, you know, I do not trade them very often. This doesn't mean you should not trade them, but I do not want to talk too much about wipeouts where I am not so sorry, wait, my brain where I'm not so used to do it. I'm not so I'm missing the right word. I'm not so erfahren. Yeah, for the German guys here, you know what I mean. Sorry for that. Sometimes the English language is not the easiest to do in the webinars. But anyway, forget about that. I think we are ready to go already here. We are done with recap of last session, and then as every time, let's just, no, not this one here, this one, let's just jump to our whiteboard. So what we do today is workflow, end of day. Okay, I have basically five points which are important for everyday end of day trading. So let's just 1 second talk about so you have two possibilities in trading, of course. You can trade on end of day basis and you can trade on intraday basis. End of day means for LocationPoint trading, the time frames we are watching is 1 day, 1 week and 1 month. This is the first thing I will write down here. So we have 1 day, 1 week and 1 month. Okay, so those are the time frames which are interesting for us as end of day trader. Why are we considering end of day trading? Because why don't we say, I don't know, let's trade on the 5-minute signal each possible on the 5 minutes time frame each possible signal. Maybe one reason could be your employee, so you're employed somewhere and you can only, I don't know, check your trades once every evening. But also the second completely valid point could be that you say, I don't the intraday time frames, I don't like these hectic markets. I prefer having time for my analysis. And also very often you see it that an end of day trader has the same performance or even a better performance than an intraday trader. And then you have to also think about the intraday trader, what time, how time consuming intraday trading is, and how comfortable you can trade by trading end of day. So also this end of day trading is somehow, it's a somehow of swing. Swing trading, where you hold your trades, let's say days or weeks. Also for the time frames here I mentioned, basically end of day trading means we trade on the daily chart. It could also be a trade on the weekly chart. And so when we trade on the daily chart, the weekly chart and the monthly chart would be our upper time frames that we have to check for location point lines. So if they are confirming or standing against our trading signal. So yeah, there can be a lot of reasons for end of day trading. I personally on my own trade mainly end of day, because I think, yeah, this as my main reason is, for example, intraday trading, and at the end of the year I can do, I don't know, 30% plus with end of day location point trading, or I can do 30% plus with intraday trading. The difference is then that how much time I needed to get this performance. And I mean, it's not like the lazy aspect that I should just say I'm lazy, I do not want to do it intraday. I am also, of course, you know, I'm a AgenaTrader employee, I do not have time. So those are also my two reasons why I mainly prefer end of day trading, or I can only do end of day trading. And yes, I mean, also last week I told you I'm starting more and more to do intraday trading, but this is also just, I mean, intraday trading is great for location point trading. You have to admit this, because intraday the markets are running very, very smooth with the location points, and they are listening often even more to the location points in the 5 minutes and 15 minutes charts than in the end of day charts. But also in the end of day you have great signals, and you're very relaxed in front of your charts, you have time for your analysis. And yes, okay, let's just, so I just wanted to talk about the reasons why to do end of day trading. And now when you decide, okay, I want to do end of day trading, for example, every evening I'm checking my positions and then just giving some new orders and managing my current trades, because also this is what I have to do, everything I need to do so I'm doing it, for example, each morning. I just have to, because I'm trading US stocks, you know, and then there it's in the morning I get all the new signals scanned by the AgenaTrader. I just put in my new orders. I just check each trade I have running. If I can, for example, go break even with the stop, so I do a break even stop, or if the trailing stops are working. Also, of course, you have to check if the stops are trailing the way you want it. And yeah, basically this is it. You have some watch lists. You just screen a few watch lists with a few interesting markets, and if you do not also put in orders there, and then you're done. You can, I don't know, my Agena is running then here, I go to work, and this is it. Everything is then already taken over by AgenaTrader. This is the great thing about trading with Agena and location point add-on, because you really can you have a very, very you do not need a lot of time. Basically you really need, I don't know, 20 minutes each day, and this is it. So yes, I can only say what can be better than trading 20 minutes and have some nice profits. And yes, just let's write down now the 5 steps for end of day trading. So the first thing you need to do is to define all the markets you want to trade. Okay, define all markets. You want to trade. What does this mean? Location point trading is possible in basically every market. I mean, I cannot for sure say if, I don't know, Korean stocks are reacting to location points the same way like US stocks are doing, or I don't know, whatever as a class, but most probably they will also use the patterns at the location points. So how you find out if a market is possible for location point trading, you just get in the history, check the history if there are some reactions at the location points, and if there are some, you know, okay, also this market is let's say, listening or playing with location points, and there are some big players in the market who also watch these lines, because this is why location point is working. Okay, so at first, of course, you have to define which markets you want to trade. In our standard workspace, these are some US stocks, because US stocks are the most are traded a lot. Let's put it like this. I think we have a forex list. About futures, I'm not sure at the moment. I think futures we do not have in the standard workspace, but let's check out then. So maybe you say, okay, I want to trade forex, I want to trade some US stocks, the S&P 500 for example, and some futures, most traded futures, some commodities, and maybe also some financial futures. And then you load all those lists as list chart groups, for example, in your Agena, because then you watch, and Agena scans all these instruments every day. Second step is the daily automated screening of those markets. Okay, daily automatized screening of those markets. What does this mean? That means when you load all these as list chart groups, all your markets you want to trade as list chart groups, and you use our presets anyway, Agena will scan all those markets for each end of day location point signal which is occurring. Okay, so this is meant with this. So in my case, for example, every morning when I start my Agena, automatically Agena calculates all signals which are there with the dynamic scanner. I just have to check all those, let's say 10 to 20 markets, and place the orders or manage the trades. One thing you have to do, this is what we would say is the best way to do it, 1 to 2 times per week. You basically should do a manual screening of those markets you want to trade. So, because why are we recommending this, or why are we doing this? Of course, LocationPoint, the algorithm, will detect a lot of signals for you. But of course, no algorithm is perfect, and location points, as you know, are quite hard to detect the very good signals with the so purely by the technical algorithm behind it. So it sometimes happens that the algorithm does not recognize a signal because of some rules which are programmed into the algorithm. Therefore, 1 to 2 times a week I manually screen each of those markets. This maybe takes then 1 hour to really just, as you know, in Agena you can just with the arrow keys just jump to each market, and what you do there, you just screen the markets for some interesting patterns, or if you see in the next candles you expect that there maybe can happen something, then you just put them into the watch lists. We have 3 watch lists then: the trending watch list, the reversal watch list, and the wipeout watch list. And then you have those watch lists which you scan each day to really do not miss any great signals. This is the intention behind this. So we do 1 to 2 times a week a manual screening. Of those markets. Okay, okay. And sort into the watch lists. This is already a step. If you really do not have, I don't know, I mean, you can say you don't have the time, it would be very good, and we really recommend doing this, because first thing what happens is you get a very good eye for the markets. You get to know location points much better. You are training yourself by doing this, by manually switching through the markets, and you sometimes really find a very good signal which the algorithm maybe does not detect, and you can trade it. 1 to 2 times. Why 1 to 2? So what you can, so for my own trading is like this. When I have the time, what is a strict rule is on each weekend I do a complete screening. So I'm going through all the markets and sorting them into my watch list. This means 1 hour for each weekend. This is, of course, I think everybody also can manage to do this. And even if it's Sunday at 10 o'clock before you go to sleep, for example, you just take your time and prepare for the next week. You anyway should do this. The second time I'm doing it, and this is, I'm sometimes doing it, sometimes not. This is how also my work day is, how long to stay in the office and all this stuff, is on Wednesday. Mid in the week. It could be Tuesday evening already, can do it Wednesday morning. However, just trying to, after 2 days, you have 2 new candles, you can switch a screen again. And also often I do not find new things in these 2 days, but I also see all this manual screening as it's the best thing you can do for your training your eyes for seeing location point signals on your own and really understanding them in a much greater detail. So I try to do it the second time on them in the middle of the week. Okay, so 1 time on the weekend, for example, it's a must to do it. Or you find 1 day a week where you do it. Weekend makes sense as a preparation for the week. The second time is up to you. If you can manage the time to do it, then it would be good to have it. So you then have this watch list. So either you have the watch list prepared on the weekend, or even you updated it on the middle of the week. What you do every day is to daily check for signals in the watch list. Okay? For signals in the watch list. So in the watch list anyway, the location point algorithm is screening for the signals, but what we want to avoid is you sorted those markets into the watch lists for a good reason, because you expected something to happen or you thought it could be interesting to watch them for the next days. So we do not rely completely on the location point algorithm that a signal when it's occurring will be recognized, but if we now have, for example, 20, 30, 40 markets in our watch list, for each day we just screen to them. This takes also 10 minutes maybe, and is already included in the 20 minutes you need each day for trading, and just scan through the watch lists with so manually screens through these watch lists. This is what you should do daily, because then you cannot maybe you find this, you sorted this signal into the watch list, this instrument, because you expected an interesting reversal, and then you have it in the watch list, and if you do not watch it daily, there is no real value behind this watch list. And yes, maybe not maybe, actually, the last thing is the daily management, daily trade management. In the location point scanner. And then this is basically it. So what I just want to do here, daily, daily, and daily. Okay, so we have 3 things what we do each day for end of day trading. We start our Agena, let Agena calculate all signals. We daily check our watch lists, and then each day do the trade management we need to do in the location point scanner. So the location point scanner is basically the dynamic scanner. And then this is it, 20 minutes. I don't know, if you're a beginner, maybe it takes you 30 minutes, but I doubt that you even need this time. If you're really doing it strict, if you have some more time and watch some markets and do some analysis, maybe. But if you really bring it to the point, you know you have to go to the office, for example, you can finish all this in, let's say, 20 minutes. You can do it in 10 minutes if you're experienced, and not even that experienced. If you just are quick, you can do it in 10 minutes. Okay, basically this is the workflow you have to do for end of day location point trading. And let's just go to Agena and let's see this workflow in action. Okay, so what I will just do is, let's just start with this, that we talk about all those lists you see here, all these tabs you see which are open. What I have open here is the LocationPoint trading end of day workspace. This is delivered with the LocationPoint package, so all of you will have exactly this workspace if you open it, and you will have it in your own Agena. So the first step, I told you a second before, is to define all markets you want to trade. And you see we did this here as a sample. We used the Nasdaq 100 US stocks. We put in the DAX 30 stocks. We also put in the S&P 100 stocks, where a lot of duplicates to the Nasdaq 100 are there, but we just as a placeholder put also the S&P 100 here. And we put here the Forex majors. No futures, as I could barely remember. But if you now, for example, say, I don't know, you want to trade, let's say futures. We just open a new list chart group. Let's see what we have for futures here. I have so many lists inside here. Let's say I have this liquid futures here. I think this is a list I created by myself. Let's say I have this instrument list with liquid futures. I just say here I have the template of LocationPoint all signals end of day. What does this mean? So these templates you also have on your side in Agena with the LocationPoint package. LocationPoint's all signals means I want to scan for all LocationPoint signals, so for trend following, reversals and wipeouts, and I want to do this on end of day basis. So you do not have to do anything more. 500 candles is enough. 1 day, 1 week, 1 month as time frames are automatically taken when you use this template. And I say okay. Okay, yeah, my teletrader. I just put this to be here in line. I put it here to the left. I see already that this is also a template. You know, I'm here in my AgenaTrader, which I use every day for trading. I just have to switch to the other workspace when I'm doing these webinars with you. So this is already, for example, a list I changed a little bit for my own trading. So just, you know, for example, what this is off topic for a raw LocationPoint add-on. Just that you know, this column I'm having here is the instrument correlation. So I'm watching, because I'm doing a lot of, you know, I'm trading the US stocks, and for each stock I have here the number of the correlation to the ES. Okay, so just what's for the last 20 days, how the stock was correlating to the S&P 500. Just that you see what I did here. And yes, okay, yes. And then I have 1 day and 1 week. It was not expected that I do not have this default template here, but basically yes, I'm scanning now here for 1 day and 1 week for the all LocationPoint signals. Basically this is what the very default template looks like. Here we do 1 day, 1 week, 1 month. Why I'm not scanning for 1 month on my side, for example, is because I think it just takes some calculation powers or some performance from your PC, and I could not use them a lot, the monthly signals, so I do not look at them, because anyway you have to check the monthly chart. But this is, you know, we will have some also advanced LocationPoint seminars and webinars in future, and then I will tell you all the, let's say, things I personalized on my side for when you trade every day, each day LocationPoints. I don't know how I do it, what I changed for my trading. Maybe we can also have a look at this in our last session in the 15th LocationPoint Academy. Anyway, I just wanted to tell you here that you just, as a new list chart group, just load here the markets you want to trade. Now when a location point signal of in any of those futures is occurring, my location point scanner right here will recognize it, because each signal, the location point scanner is a dynamic scanner. For those of you who do not know the dynamic scanner, you can open a new dynamic scanner with main, new, chart container and dynamic scanner, and there you can just use a template. This is the chart template you can use. This doesn't matter which you take there. And the dynamic scanner takes all signals which are occurring in the how they are called, analyzer sessions, which I use here. Okay, so I have a lot here in my AgenaTrader. So I selected that this location point scanner should only take location point reversal signals, trend signals, fast movers, and those which are detected in the all signals section. But all this is predefined for you. So all the new signals you get in here, basically it's already a little bit of add-on explanation, but anyhow, you just load the markets you want to trade here. If you do not want to trade S&P 500 stocks, you just delete it. A little trick, a little life hack, I don't know if you know it, if you do a middle mouse click on a tab, so I click with the middle mouse and I close this tab. So just in case some of you did not notice, you can with this way you can adjust a shortcut to work with tabs in Agena. Okay, so now I have my 4 tabs here with all the markets I want to trade. So when we just go back, okay, 1 second. Yeah, this is where I wanted to go. So when we go here, we can maybe say, we can say, okay, define all markets you want to trade. We did this, and then also this daily automatized screening of all those markets is anyway when you just start your Agena. This is done, and you just have to check your location point scanner. So the next thing, or already maybe nearly the last thing we need to do, is now to scan manually. So maybe now let's assume it's Sunday, yeah, and okay, I know, yeah, let's just go through my 451 markets here. Let's say yes, in 1 hour you can do it, and then we scan those markets. 1 second. I just need a sip of water. 1 second. Okay, I'm back. So now what we need to discuss is with which rules we have when we put an instrument in which watch list. Basically, we have 3 watch lists predefined for you: the trending watch, the reversal watch, and the fast mover watch. Basically, you can also do it with one watch list, but it's much more. It's better to have the overview and have 3 watch lists, because then you know which signals or why you put it there, for example. Okay, and what we also do in the location point add-on, we have those shortcuts to the lists. Okay, and for end of day trading we only use the trending, the reversal, the first 3 buttons we need. Okay, so let's start with, I don't know, this first value, and we check, I don't know, I just check the daily chart and say, okay, this doesn't look interesting. Okay, so you have a strong down move, then you have this correction here. It could be interesting if in this area you would have some stairways maybe to speculate in the down direction, but drawings. What we see here, this sideways phase, basically we are not interested in this scenario. Also, I would say this is basically not interesting at all. Okay, I just have one look, finished. Okay, I don't even have to go to the upper time frames. If I see, okay, in the daily chart here, this is sideways, I'm not interested in doing this, or trading this the next days, because anyway, you know, at least in 1 week I'm checking this again. So if there are 5 new candles, maybe they're probably also be sideways. And if you have time on Wednesday, in already 2 candles, you will have another look at this chart. So I go to the next one. Apple. What is Apple doing? Okay, just quickly checking here. We see a reaction at 20 here, but now we see it's between 8 and 20, for example. I say, okay, not interesting for me. We have a down gap. Not interesting, not nice. I will not analyze each market because then it will take too long. So also here it's currently rising. We need a retracement for anything to do, so this is not interesting. Here there are already some retracements here. This could be already an 8 train signal here. So what we are looking is where there is a nice possibility for the next days, few candles, that there could be happen something. Okay, we will see something then in a second. This, for example, would be a market where I can think of putting it in a watch list. Why? What we have here, I mean, you know, the watch list is nothing, you can delete it again after 2 days, but what we see here is that this up move stopped exactly at the SMA 20. Okay, now we have here a few things. We have a rising SMA 200, we have the SMA 8 over the SMA 20. Some of those things I like to also look at, because they often, a rising SMA 200 is, you have to say, it's an indication of a bull market normally. So if I go short, I basically want a falling SMA 200. Anyway, what I see here is that the market is at the point stopping at the SMA 20 here. This means for me, okay, if there is now coming a nice short reversal, short bar, maybe this could be a nice double bar retracement, and then I can think of trading this. I mean, some things here you will have then here and here, of course, some 2 resistance areas, but they also can have some great impact, you know, to really rush through those 2 levels here. So these are just some thoughts I would have if I switch to those markets. Before noise problem. Okay. You can hear me? Can you hear me still? I just got a message here from Trend 2020. Okay, yeah, if it's, please just write me if there are some problems with the voice and noise. Okay, let's continue here. Basically, yeah, I do not go in too much into detail. If I see this, okay, I think, okay, this could be interesting. I do not do a full analysis. I just say, okay, let's do this in the trending watch list. Why the trending watch list? Because I expect that there is a trending signal, how to say, I'm missing the right words today, is developing. So if this red candle is coming, this could be interesting. So I know tomorrow when I scan through my watch lists, I will have this market here, and I can check if I get a signal, if it could be interesting. If the red candle is developing and forming, then I can say, okay, this is a reversal, let's see if I can trade this, and only then I will do a complete analysis, because otherwise you will lose too much time in your manual screening. Okay, so I just press this button here to push it into the trending watch list, and if I go here, so now this was applied materials, so AMAT, and you see now it's in the trending watch list because I pressed this button, and now I have the first instrument in my trending watch list. And this is, I just continue here. Here no nice things going on here, also not here. These are our situations where you can say, okay, there's a strong move. This could be, for example, a wipeout. A wipeout could form here. Okay, then I say it's fast move, because you know wipeout is, you have a few very strong candles. They are not too big, but let's say, okay, you can see if now a small red candle is here forming, you will see it, and you can place your wipeout orders. Also, this could be interesting for a future 8 or 20 train if the market is coming back. But anyway, because it's in a fast mover, you see here now this stock is in a fast mover watch list. You will watch it every day, and now if you, for example, a fast mover did not occur, so there's a strong down move, for example, you can think of pushing it out of the fast mover and then giving it to the trending, because then maybe you have a possibility for an 8 train or 20 train. So also that you understand, there is, let's say, okay, this is a reversal here, reactions at the SMA 8, but in the watch list I do not want to have signals which are already there or which occurred already. I want to have signals or instruments which have a high possibility to be a nice signal in the next days. And of course this is also, let's say, this is some subjective things, you know, also sometimes, you know, to get some feelings if some markets could be interesting. And yes, maybe also, I don't know, I do not like it to push too many instruments into my watch lists, because you know you have to check them every day, and this is not what is so nice. Here, for example, you see the market is slowing down. I would, for example, push this into the trending, because I expect maybe when in the next 2 days it's coming down here and doing a reversal here, and if this happens I can think of trading this. So also a rule is normally if the market is above the SMA 8 and SMA 20, you should think of the first thing you think of is a trending signal, because here I would not push it into the reversal watch list, because the first thing which could happen is that it's going down here, and then you have a reversal signal then somewhere here. Pushing some markets into the reversal watch lists only will apply if the market is already below SMA 20 and SMA 8, because then the next thing what can happen in LocationPoint, from a LocationPoint perspective, is to have a reversal have a reversal signal. Okay, so a rule of thumb, if the market is above, for long signals, above the SMA 8 and SMA 20, I put it, or I expect some trending signals. I expect that some trend moves are continuing, and I push it into the trending watch list. I would not push this market into the reversals. Of course I can expect into the next weeks, maybe then it's a reversal signal, but we do not want to predict the next few weeks, we want to predict the next few candles. So pushing a market into the reversal watch list only is possible if the market is below SMA 20 and SMA 8, because then the next possible scenario could be, for example, that the market is going down here for the EMA 130 and doing a reversal here. Okay, and only if the market, I know, is somewhere in this area, not so far away from the EMA 130 and going down, then I would push it, for example, in the reversal watch list. Okay, I think and I hope you got the idea of doing this and setting or sorting all those instruments into the 3 watch lists. So basically what you then do is each day you just go over those few markets you have in here, just check the last candle. Do you have maybe even a LocationPoint signal of the package, so of the algorithm, or you see some reversals which are not detected and you want to trade them and you put in your orders directly here. This you're doing for the training watch, the reversal watch, and the fast move watch every day. Then I'm going here into LocationPoint scanner. So also it's a workflow from left to right, for example. Okay. So when I start my Agena, the first thing would be I check my watch lists. Just go over them, a few minutes, and done. And place already the first orders. Then I go to the LocationPoint scanner. Check all my new signals. Okay. Go over them. Then you have. So the last thing you have to do then is the trade management, and for this, in the previous versions, or what we have still here is the running trades watch list, not watch list, the linked list and the open orders linked list. They are linked to the order manager and the trade manager down here, but what we developed in the meantime are those two check marks here, show open orders and show open trades and show open orders. This means now I do not have any open orders, but I can show you if I, for example, think about trading this and this and this. So I put in some orders here some time ago, maybe also from my watch list. So okay, nice. Okay, a nice error message here. I'm not sure. I'm always at the latest versions which are not officially out, but a nice thing to report to the devs after the webinar. Okay, anyway, what I wanted to show you is if I now put, okay, this was not expected, I just ruined something here with this order. Anyway, normally what's happening, and it's also what I use every day, is if you do this show open orders and show open trades, oh no, this was my mistake. Okay, now I can do this here. Okay, it's of course I didn't activate this. I was already one step too fast. Of course, you activate the orders normally. You don't have a proposal order. You activate the order. You activate the entry because you want to trade it. And what you have then here, every instrument where you have an open active order is here. You can see it. It's also in light blue. So this is with when you activate show open orders, you will see this. And as I do not have any open trades, let's just, I don't know. Okay. It just doesn't work out like I want with this version. But anyway, you know, when you have an open trade, it will also show up here in light green or light red. If you do not use this yet, this is always, I use this every day, because this LocationPoint scanner is then the only view I need for checking new signals, for checking the orders I have in the markets, and also then you have all listed here where you have a running trade. And where you have a running trade, you can check, can I do a break-even stop? Should I delete the order because something in the market happens which I do not want, and I do not want to have this trade anymore, I do not want to have this order in the market anymore. Or you just check if the trading stops are working as you want them, and change everything what you need, and then you're done. So basically I do not use those running trade and open orders here anymore. In my case I deleted them. Of course it's up to you, but with these options up here, basically they are obsolete and you do not need them anymore. Okay, exactly 7 o'clock. I think I covered everything for end of day trading with location points. If you got some problems, also you can write anytime in our Traders Yard groups, in our LocationPoint Protected or LocationPoint Public group. Me or Gilbert are checking often the groups if there are some questions. Until now there is not a lot of traffic, but anyway, if you have some questions, just do not hesitate to ask. We are happy to help you, and I hope I could teach you some new stuff here today. I hope have a nice workflow already for your trading. Maybe you got some new tips here or new workflow ideas how you can use the defined or predefined workspaces from our side. And as always, these are just ideas, or this is our way of trading, or how Gilbert also developed it. Also, you know, I did some small changes, but basically the workflow stayed the same. But I also just want to encourage you, if you do not feel comfortable with one of, I don't know, if you want to have one watch list, then use one watch list. If this fits to your trading, you know, everybody has to find their own trading style in a way that you can do some small changes to every trading style or combine things. And this also is applicable for the workflow. So I don't know, any ideas you have, if they are fitting for you, don't think I don't know, but in the webinars they say I have to use it like this way. If it works, just use it, and these are always just ideas how we are doing it. Okay, with these words, guys, I thank you for joining me also this week. Next week we will talk about the intraday workflow, so it's about the same like today. We have a market preparation here, so a few steps are more to do in the intraday trading. And yes, thanks for being here this week, and I wish you some nice trades for the next week, and I wish you also a nice evening, and see you next week. Bye guys.